I'm Emily Chang, and this is Bloomberg Technology. Coming up, Qualcomm slapped with a massive fine from European regulators who say the chipmaker illegally pushed out competition to get its products in Apple devices. Plus, more highlights from the World Economic Forum in Davos, including our conversations with Bill Gates and the CEOs of Morgan Stanley and the Nasdaq. And Intel gets ready to report its fourth quarter earnings, the company's first since the Spectre and Meltdown chip flaws were revealed. We'll take a closer look on the impact to its bottom line. But first, to our lead. European regulators have slapped Qualcomm with a $1.2 billion fine for anti-competitive practices. From 2011 to 2016, Qualcomm paid Apple to exclusively use its chips in their products. And speaking at a press conference on Wednesday, European Commissioner for Competition, Margaret Vestager, said Qualcomm pushed out rivals as a result.
Our decision found that Qualcomm cemented its position by illegally shutting out rivals from the market for over 5 years' time.
For its part, Qualcomm plans to appeal this decision. In a statement, the company said, "We have a strong case for judicial review, and we will immediately commence that process." For more, let's bring in our Bloomberg editor-at-large, Corey Johnson. So expand here on what the European Commission is saying that Qualcomm did.
So the European Commission is suggesting that your iPhone stinks or your iPhone could have been better, and that Qualcomm illegally used its market power to pay off Apple and say, we'll give you these chips at a rebate if you just don't use our competitor, if you don't let, in particular, Intel in the door.
Why would Apple do that?
Well, the argument here is that Intel, by not having a shot, couldn't have developed a better chip. I'm sure the people at Apple wanted to go with the best chip they could, but at a price. Qualcomm offering so many rebates and discounts, essentially the EU arguing paying off Apple to keep competitors out, not only kept Intel chips out of Apple phones, but because of the market dominance of Apple phones, number one in market share in the U.S., although not worldwide, because of the dominance of those phones, so many Apple phones with one kind of Qualcomm chip in it means that it let two things happen. It let Qualcomm lower its price of production, Apple phones being monolithic in the way that they're presented, lowering that cost of production meant they could sell chips to other phone makers, really keeping Intel out of the mobile phone business, which has been a running theme for what we've said about Intel for the last 7 or 8 years.
So they say there are going to be no repercussions for Apple. Why not?
Because Intel, fundamentally what Apple is getting is a lower price. And so they've decided to not punish Apple for being in collusion with this. The notion that Apple was getting what it wanted, lower prices, not colluding with Qualcomm, but being sort of the beneficiary of Qualcomm's plans. At least that's the EU's contention.
Is this something that they could face penalty for in the United States?
The EU has taken a much stronger stance in regards to anti-competitive prosecutions. I'm sure certain people at the Justice Department would disagree, but over and over again, we've seen cases, particularly against Google and now against Qualcomm, where the EU has taken a much stronger stance than the U.S. has for a variety of reasons. But we've seen the EU really willing to take on these companies with a notion that competition ought to be better than it is.
So Qualcomm plans to appeal.
Sure.
How likely is it that would be successful?
Who knows? I mean, these guys, Qualcomm is a company fundamentally built on the basis of lawyers, more than any other big semiconductor. I mean, Rambus was certainly one back in its day, but Qualcomm is a company that's fundamentally built on creating technologies and licensing that technologies and using lawyers to make sure they extract payment for those technologies. They are used to, indeed, they are designed for a need for speed in the courtroom.
Now, what makes this even more fascinating is that Qualcomm and Apple have recently been at each other's throats.
Sure.
How does that play into this?
Well, so there's that dynamic there, right, where Apple wants to continue to get lower prices, and Apple wants to continue to fight for the lowest price they can get from any competitor or any supplier, and they have beat them all up over the biggest suppliers, Qualcomm. They're going to beat up the biggest. That's where that battle is being waged. but also Qualcomm's in its own existential battle trying to fight off a hostile takeover by Broadcom. And what's interesting here is that the size of Qualcomm attracts these massive billion-dollar-plus fines, big problems in pursuing their license agreements in China with people who are using their technology, and Qualcomm is just not paying them. That's been an ongoing issue for them in China, obviously the most important market for them in terms of where phones are made. But it also might suggest, hey, Qualcomm's behavior, they are so big, keeping them separate from Broadcom, they might make that argument with regulators that they need to be separate, even though their behavior is, according to the EU, reprehensible.
Now, Broadcom, meantime, is trying to buy Qualcomm. What does this mean for that bid?
Well, that's just it. I mean, I think what it shows you is that the size of this business might, the real question here is, are they going to have to pay it, and is it going to imperil their business going forward? The weaker Qualcomm is, the lower the stock goes, the easier it is for Broadcom to take over this company. Now, whether the customers will stand for it is a whole different thing. What the EU seems to be saying is, we want more competition. A merged Broadcom-Qualcomm is not more competition, it's less competition. And in a strange way, what the EU is showing their cards here is really suggesting that they might not be for that big merger that would create the third largest semiconductor company in the world.
All right, Corey Johnson, our Bloomberg TV editor-at-large.
Thank you.
Thank you. Okay, in the latest revolving door, Meg Whitman, who is stepping down at HPE February 1st, is joining the new mobile media business founded by former animation studio chief Jeffrey Katzenberg. Whitman starts at New TV as CEO in March. New TV, as the company is tentatively called, will be based in LA and aims to bring Hollywood-quality storytelling to videos that last 10 minutes or less. Coming up, iPhone customers can look out for new features on their devices this spring when Apple rolls out a software update. What you can expect next. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Apple plans to release a software update for the iPhone in the spring. Animated emojis will be added to users' devices, plus a few other features that have been in the works. Our Bloomberg Tech reporter, who else, of course, but Mark Gurman, covers all things Apple for us and has all the details. So what are the features you are anticipating the most?
The feature I'm anticipating the most is this new option to disable the battery throttling feature. So remember all the controversy? We were talking about it on here many times. Basically, Apple released a software update last year that intentionally slowed down older iPhones in order to have them not reboot, because batteries, as you go faster on them, they age. This is basically to add longevity to batteries.
AKA Batterygate.
Whatever you want to call it, Batterygate, battery this, battery that, but you basically now will be able to turn that feature off. So
that means you'll what?
That means that if you have an older iPhone and you don't want it to slow down anymore, you can turn that off, but Apple will say, hey, you're putting yourself at risk. You might miss a phone call, you might miss this, miss that. I think turning it off won't affect most people in practice, but we'll see in a few months from now what people say about it.
There are also some new health features. Tell us about those.
Yeah, so this is a really anticipated new feature. It's to allow you to access your hospital health records on your phone. So before, you can get your health information from the Apple Watch, from the sensors in the iPhone already, and third-party devices, integrates with things like Fitbit. But now you'd be able to get information directly from your hospital. So your lab results, past procedures, doctor's notes, and whatnot, all through the health app. They signed up with 12 hospitals. There's a few big names across California, New York, and Pennsylvania. I'm sure they'll add more hospitals as time goes on.
So talk to us about how difficult is it to get these hospitals on board. I mean, they really need the cooperation of the medical community, which has been very slow to take on new technology.
Right. There is, across some hospital networks, a uniform way to access all of your health data. So if you have a doctor in California who happens to have the same server, the same system as a doctor in, let's say, Ohio, you can go into Ohio's doctor office and get all of your information. But the key is dealing with all of those different networks and then dealing with hospitals for special deals on a hospital-by-hospital basis, because obviously Apple's not going to put a software update out to, a billion people that could impede on the privacy. So I think they were taking pains to make sure that wasn't affected.
Also, new features for augmented reality, correct?
Yes, so they have ARKit 1.5, which is basically going to allow you to project images on a wall now or on a door. So you can, let's say I have an animated version of you, and I want to project it on, my door. For some reason, I could do that now.
And HomePod
yes.
Which was delayed.
Which was delayed.
Is now coming out next month.
Yeah, about a month and a half delay, give or take. Supposed to come out in December.
Not huge, but they did miss the holiday season.
They did miss the holiday season, but it sounds good. As I remember Tim Cook told you, we'll be able to judge it for ourselves in a few weeks' time. So February 9th for that.
What do you make of the fact that that this was delayed, and this is Tim Cook's expertise, getting products out on time?
Yeah, it's unfortunate because this is the second year in a row where they had to delay a major new audio product. If you remember, in 2016, 2-month delay for the AirPods, which have become quite popular. Now about a 2-month delay for the HomePod. I don't know if this is the start of a new trend for the company. It certainly seems to be isolated to accessories. So every time Apple comes out with like a hot new accessory for the iPad or the iPhone, the Apple Pencil and the iPad keyboard were 2 examples, now the AirPods and the HomePod. So I feel like there's something going on with the ramp up for accessories. We'll see if it happens with the next one.
All right, Mark Gurman, our Bloomberg Tech reporter who covers Apple. Thank you so much. Now to another story we are watching. Softbank is leading another mammoth funding round, an $865 million round to be exact. This time the investment goes to Katara, a little-known construction technology startup looking to shake up the building industry. This investment adds to the portfolio of Softbank's Vision Fund, which made about 100 investments last year, totaling $36 billion. Joining us now from Seattle, Bloomberg Tech's Dina Bass. So, Dina, what does Katara do? This is a lot of money for a little-known company.
Sure, Emily. So Katara's trying to do sort of what, they say Uber or Airbnb did to the hospitality and the taxi industry. They're trying to bring technology and software and standard processes to the construction industry in an effort to reduce costs, speed things up. And, they're doing they basically want to control every aspect of the process, from architecture to interior design, through to standardizing the building and construction work on the actual job site in an effort to make things go quicker and be more profitable.
So, what does this signify for Softbank in terms of their portfolio? We know they've invested in Didi, they've invested in Uber, they've invested in Slack.
It looks like they're just looking for interesting opportunities in a variety of different industries that in some ways haven't changed in many years. Late last year, they also made an investment in real estate technology. So that shows sort of an interest in maybe trying to come up with a way to use technology or for them to benefit from startups that want to use technology to revolutionize the building industry and to take advantage of sort of the real estate and construction boom, the housing boom in many parts of the U.S.
What are some of the challenges facing Katara?
So, it's interesting. Katara, most people probably haven't heard of it, but it has some pretty high-powered backers and founders behind it. Jim Davidson from Silver Lake. And their chairman is a guy named Michael Marks. And what Marks is probably best known in the tech industry for is having kind of built up a company called Flextronics, which did something similar in the electronics industry to what Katara wants to do in construction. They, became this massive company making electronic devices and gadgets for other companies, things like Xboxes or HP printers. Now, in some ways, the construction industry is similar to the electronics industry. There's a lot of ways in which Katara wants to do the same thing that Flextronics did. But there's also ways in which it's much more challenging. So, the construction industry faces a lot more variation than the electronics industry on the building and assembly side. You have, many, sort of over 100,000 different municipalities in the U.S. They have different building codes, different weather, different seismic requirements. That's difficult. Katara's trying to pre-assemble a lot of the materials they're going to use, things like counters or cabinets or even the walls, the exterior and interior walls, but they still have to do a lot of construction on site, and the construction industry right now is facing a shortage of skilled workers, so that's a challenge for them as well. These projects also take several years. Sometimes they run out of money midstream. That's a little different to what Flextronics faced.
So when will we know, how successful Softbank's Vision Fund is? I mean, obviously they're making big bets on a lot of companies, really big bets. At what point do we know if this is really paying off?
Yeah, I don't know, Emily. They haven't even finished off the whole fund. I mean, this is a fund that's targeted at $100 billion. I don't think they're quite there yet, although they've started making investments. Even with Katara, I think it's too early to know whether that one company in the fund will be successful. The company's chairman, Michael Marks, told me, well, they're at $1.3 billion in bookings, and he predicted to me that they'd be at $10 billion in revenue within a decade. That's a huge bet, but it's still very early days just for that one company, and then you add in the other 99 or so companies that Softbank has invested in. But there's some big companies in there and some big names that seem to have, in some cases already, a fair bit of success, and in others a lot of potential. But it's in obviously a lot of disparate areas as well.
All right, well, obviously, I know we're going to continue to follow SoftBank across the map. Bloomberg Tech's Dina Bass in Seattle. Thank you, as always, for stopping by. Coming up, more from Bloomberg's coverage in Davos. We'll talk to the CEOs of Morgan Stanley and the Nasdaq on the future of cryptocurrencies. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Stripe is getting out of the Bitcoin business. The online payments company says it will stop processing Bitcoin transactions on April 23rd. The company says Bitcoin has become less useful, explaining that transaction confirmation times and fees have gotten longer for the cryptocurrency. Meantime, Morgan Stanley CEO James Gorman says Bitcoin isn't going away, but he does have some reservations about the frenzy over the cryptocurrency. Gorman spoke to our Bloomberg editor-in-chief, John Micklethwait, at the World Economic Forum in Davos.
I think, Bitcoin is not going away. It's not a fad. But the aggregate market cap, if you will, of Bitcoin globally is less, I think, than twice the value of Morgan Stanley today. So in terms of...
So they could buy you, a majority stake.
I was making a slightly different
Yes.
point. Listen, we think we're an important institution, but we don't deserve the kind of press that a Bitcoin is getting every day. And Bitcoin is punching above its weight. It's speculative. It's fulfilling a need apparently at the moment, but it's not something which is fundamentally changing the global landscape. And for the average investor, no, I would advise them not to be investing in those kinds of speculative instruments.
Another big theme, which you've talked about a bit, is automation. There's a lot of evidence, trading desks, all these things people are beginning to ask about. Do you think in wealth management and investment banking you're relatively safe from that, or which way do you see that going?
Well, just to the core question of automation and other related topics, I was asked by a journalist recently about how much I focus on our competitors, and I said, obviously you're in the same industry, you have some focus, but it's not what we get out of bed worrying about. And he said, what do you worry about? I said, I worry about AI, I worry about automation, I worry about cyber risk, I worry about digital. All of these new technologies that are coming to the market at the same time are transforming the way business is getting done. So we try and look at each of our businesses, and back to your core question, with M&A, high-priced, highly complex global transactions, it's very hard to automate that. It's very hard to build an expert system about how to advise a board. Obviously, the electronic trading in equities has long been going on, and increasingly in fixed income. With wealth management, the evolution of the digital space is not new. Yep. Since Schwab, Ameritrade, E-Trade, these firms have been around. They've been providing effectively digital transaction and advice for 2.5 decades. But it's going to continue to cause firms like ours to provide both human capability and best-in-class technical capability.
That was Morgan Stanley CEO James Gorman. And Nasdaq CEO Adita Freeman also joined Bloomberg from Davos. She spoke to our Bloomberg editor-at-large, Eric Schatzker, about the company working on cryptocurrency futures. Take a listen.
We have been working with the industry and with a great partner to look at whether or not it's the right thing for us to do.
Is it?
And I think that we're still evaluating that. We've been talking with the industry to say, is this something? You already have 2 Bitcoin futures out there, so is there something different, a different construct, which we have come up with? Would that be of interest to you? Would there be demand? So the first thing is, if you're going to create a product, you want to know that people are going to use it, and use it differently than how it's being used today. And the second second thing is we'd have to self-certify as a futures exchange for this, and we would use our NFX license to do that. But we have to make sure from a risk management perspective we are fully prepared. And those are the two things that we're still working on.
Any preliminary conclusions? I mean, does it seem on the face of it appealing? Regardless of what you think about crypto as a medium of exchange or a store of value?
Well, I would say that our view is that digital currencies and cryptocurrencies will have a role in the global economy. The question is, will they mature to a state that really is used for the transfer of goods? But in the meantime, I think that there's certainly a lot of demand out there for that indicative price and that ability to trade it. It's just a matter of, can we create a construct that's unique enough and different from what's already there?
Would you think about providing or building a futures contract for something other than Bitcoin, say Ether or Ripple?
Well, in fact, we have two exchange-traded notes that are listed in our Nordic markets that have been done through another partnership. And one is an Ethereum ETN, and the other is a Bitcoin ETN. So we would look more holistically at cryptocurrencies and not just at one.
That was Adina Friedman, Nasdaq CEO in Davos. Coming up, when Broadcom went public with a hostile $105 billion bid for Qualcomm, it created the potential for a giant in global chips. We'll discuss the impact on Apple's supply chain next. And if you have a Bloomberg, check out the Bloomberg Terminal, TV Go. You can watch us online, click on our charts and graphics, and interact with us directly over the IB. Just go to TV Go on your terminal. You can also contact us on Twitter. I'm at Emily Chang TV. And check out TikTok by Bloomberg, the first 24-hour global news network streaming live on Twitter. This is Bloomberg. Bloomberg Technology, I'm Emily Chang. Let's return to our top story. Qualcomm slapped with a massive fine from European regulators for paying Apple to ensure that only its chips were used in iPhones and iPads. It is a big development in what has been a dramatic few months for the semiconductor industry and Qualcomm especially. Let's bring in Bloomberg Tech's Ian King, who covers all things chips. So what's your perspective on this fine?
Yeah, I mean, their perspective, which they gave to us pretty quickly, was, look, no big deal, move along here, nothing to see. This
just
is
$1.2 billion.
Well, they've got 30 in the bank, so they're saying this is retrospective, doesn't affect the way we go forward. But it's unavoidable. Pretty much every major market in the world is looking at them. The Chinese have fined them, the Koreans have fined them, the Taiwanese have fined them. Now the Europeans, and they're also, as you know, under investigation by the DOJ here. So this really is a cumulative thing which looks very bad for them.
Fine them for this very same thing or for other practices?
A mixture of things. They're saying that the European thing is focused on their chip business and not really on this licensing business that they have. So it's a separate thing and no need to worry. But regulators looking at your business is not a good thing.
So could this impact Broadcom's bid for Qualcomm?
Right.
I mean, it really does just make them an easier target, right?
Exactly, you nailed it. I mean, the whole reason that Qualcomm stock is where it is that the whole world is against them. If you're an investor, how do you get behind a company that's facing so many challenges to all of these important businesses? The stock's depressed. Therefore, Broadcom's bid, guaranteed money, maybe it looks more attractive in that light. If there's no path towards getting these things resolved, and we have to point out that Qualcomm tends to win over time, but if there's no clear and present path towards getting away with all of these things, then maybe the Broadcom offer starts to look more attractive.
You have a new story out about how Broadcom is already dominating the supply chain. How, who does that mean for Apple as well?
Yeah, I mean, we looked at this, and because you remember, Emily, when Broadcom came out and announced their bid for Qualcomm, they were like, oh, don't worry, we've talked to our biggest customers, they're okay with this. And you think, oh, hold on a minute, that doesn't make any sense, right? Why would they want people to get together? Because what does that mean? That normally means prices go up. So we looked into this a little bit. Obviously, the licensing business, if that goes away, and we've been, reported that probably goes away if Broadcom takes it over. And then, well, what happens
is it? Is it a shell of a company? What? What's left?
Well, the chip business is really important. That core modem business, the whole industry needs that, and that's great. What makes Qualcomm a more broad threat to Apple, for example, is Apple makes competing products. Apple makes processors, the A series, which compete with Snapdragon. The Snapdragon goes in those Chinese handsets that are taking sales away from Apple in China. Maybe if Qualcomm doesn't put as much money into that or doesn't focus on that business as much, Apple's premium starts to go back up again. It starts to be perceived as the best handset maker in the world by a bigger margin. Who knows? I mean, there are all of these considerations that might be going on.
All right, well, I know you will keep us posted on the entire play-by-play. Ian King, who covers chips for Bloomberg Tech, thank you. Well, Intel is getting ready to report earnings on Tuesday, the first set of earnings since the Spectre and Meltdown chip flaws were revealed. Our Bloomberg editor-at-large, Corey Johnson, took a look at the company's response to the problems and the curious timing of a stock sale.
CES 2018, the biggest party of the year for technology, and among the keynotes, Intel's CEO Brian Krzanich showing off a kitchen sink of tech from VR.
We place multiple cameras around the perimeter of a playing field.
To pilotless helicopters.
Let's let it fly.
To a legion of drones.
You just witnessed the world's first 100 drone indoor flight show without GPS.
To, why not, an NFL quarterback.
The real Tony Romo. Hey, Tony.
But amidst the hype, there was an elephant in the room. The flaws in Intel's chip designs. Flaws known as Spectre and Meltdown. They allow hackers to steal data from computers running on Intel CPUs. How many computers? Well, Intel makes 90% of the world's computer processors and 99% of the server chips that power the internet. This flaw effectively puts every PC, smartphone, and server in the world at risk. Krzanich tried to soothe the concerns.
As of now, we have not received any information that these exploits have been used to obtain customer data.
Not yet, but hackers have proven themselves to be persistent. The patch for the flaw is flawed itself. It can slow chip speed up to 30%. It hasn't helped the stock performance, but the bigger question, will this security threat threaten Intel's sales? The company still struggles to crack the smartphone market, and companies like Amazon, Apple, and Google are all working on their own chips. And to make matters worse, in the 6 months since Intel was stealthily trying to work on a fix for the flaw, Krzanich sold $24 million in Intel shares. Now, the company says it's a routine sale, but that hasn't stopped U.S. lawmakers from demanding that the DOJ and the SEC investigate. Now, the last time Intel had to fix a big chip problem like this was the 1994 Pentium recall. That cost Intel $475 million. That kind of problem might not fly with investors.
Our Bloomberg editor-at-large there, Corey Johnson. Well, the NYSE's biggest IPO since Snap made its public debut. PagSeguro, a Brazilian payments company, raised about $2.7 billion in its IPO and rose more than 4% on its first day of trading. The company has made headway by selling rather than renting card processing machines and providing an easier-to-understand pricing policy to small merchants who wouldn't accept card payments otherwise. And speaking of IPOs, coming up, one of the most successful public offerings of 2017, the cloud identity company Okta. Can it sustain that valuation? We'll ask the CEO next. This is Bloomberg. A stock we are watching, Electronic Arts, fell a little more than 2% in the session, its worst performance in more than a month. This after a Kotaku report that EA may delay the release of its highly anticipated Anthem game early next year. Well, the cloud identity company Okta is out with its annual Businesses at Work report. It is an in-depth look into how organizations and people work today, exploring the apps and services used to help productivity. The top apps, Microsoft Office 365, Salesforce, Amazon AWS. G Suite and Box. However, one of the more interesting highlights is on security data. Joining us now to break down the research, Todd McKinnon, CEO of Okta. Todd, thank you so much for joining us. So you have more information here about where threats to enterprises are coming from. What did you see?
Yeah, I mean, I think this is our 4th annual Businesses at Work report, and it really gives our customers and the whole industry an insight on what's happening in the broader ecosystem. And we see everything from what applications are being used and what's the fastest growing application and what trends there. And one of the trends, as you mentioned, is around security. The first thing is that of the top 15 fastest growing apps, 7 of them are actually security tools. So it's something we've never seen before. It's like people aren't just using applications, but they're using technologies to secure those applications. Things like the fastest growing of those tools was something called Jamf, which is a security and management tool for Macs. So people use more Macs in the workplace. Jamf is the fastest growing app. Things like Cloudflare and Sophos and these things that are really kind of the guts of security departments in companies. But with all these security threats we're seeing, they're becoming a big deal and companies are invested in those technologies.
What trends are you seeing from the threats themselves?
Well, the big takeaway in terms of the threats themselves is that where they're coming from geographically. So, you hear people talk about security threats and it's always like from China or always from Eastern Europe. And I say like, well, what do we have against them? I mean, and what we've seen in the data is that security threats are really originating from all different kinds of countries, Europe, Western Europe, Eastern Europe, even from the United States. And what the takeaway for us is, you can limit your security exposure by limiting the geographies that can connect to your system. So if you're capable of locking down access to your systems from certain geographies, you should do that, and you should use technologies that allow you to do that.
The report also talks about the effectiveness of password policies. Yeah. How effective are they?
Yeah, exactly. So in the security arsenal, there's no one silver bullet. You can't just lock down things geographically. You also have to use, and the report bears this out, you have to use strong passwords, and you also have to use multi-factor authentication where it's appropriate. You have to make sure that accounts are turned on and off at the right times, and it's really, security folks have a hard job, and luckily there's a lot of technology around to help them be more secure.
Are you finding that password policies aren't as effective as they should be?
I think the problem with password policies is that they're not always appropriate for the level of information being secured. So you get this phenomenon where you have these crazily restrictive rules about complexity for something that may not even be that secure, or may not even be that sensitive. And then on the other end of the spectrum, you'll have something that is, doesn't have enough complexity, doesn't have enough multi-factor authentication, isn't high enough security. So with a way to kind of put the right security restrictions on the right data based on sensitivity, that's really the holy grail for customers.
So you had a very successful IPO, one of the more successful ones of 2017. Of course, the question now is, can you keep it up? Who are you taking share from among your competitors, one of which is Microsoft, which is it's a big company.
Yeah, we're very fortunate to really have pioneered this category of this concept of an identity cloud, which is, before Okta, all the identity products were really seen as point features or add-ons to other platforms. And we've really pioneered this idea that identity is its own cloud. It is a standalone platform.
What does that actually mean?
It means that there's value in connecting any kind of technology to any people and having that pre-built set of integrations that allow companies to seamlessly pick the technology they want to use and seamlessly deploy and connect it securely to their users. That removes a lot of friction, and that enables businesses to adopt technology faster and helps their own companies be more strategic and grow and make their employees more productive.
So you basically provide security to companies that use multiple kinds of cloud apps.
Yeah.
So maybe if you use Microsoft Office and Box and Workday, you can have a seamless use of all of those across.
Exactly. Or if you're building a new customer website or a better mobile app for your customers, you can have stronger security that's easier to use on that front as well.
So who are you taking share from?
I think it's really, it's a new category. I mean, the concept of identity as a first-class platform is a new category, and as more companies adopt the cloud, there's legacy competitors from the big identity suites from companies like Oracle or CA or IBM, but largely it's a new category as the cloud emerges, and we're there to fill that gap.
So where do you see opportunities to expand the product and to expand geographically in the near term?
Yeah, the product is it's very broad. We do everything from, I mentioned, customer identity to employee identity. So there's, the product's already very broad, and we'll continue to enhance the areas we have. I think the big growth is going to be internationally. Only about 15% of our sales now are internationally, partly because North America is so strong. But last time I looked, more than 15% of the people are in the are not all in the U.S. So we have a lot of.
So where internationally?
Yeah. Primarily, a lot of growth in Europe, on the continent of Europe, and then expanding out to Asia Pacific and eventually Japan as well.
All right, Todd McKinnon, CEO of Okta. Thank you so much.
Thanks for having me. Yeah.
Coming up, Microsoft co-founder Bill Gates from the World Economic Forum in Davos, why he says President Trump's America First approach could damage U.S. influence in Africa. This is Bloomberg. Google CEO Sundar Pichai is open to paying more in corporate taxes. At the World Economic Forum in Davos, Pichai explained that the more important question was where Google should pay. The company's current blended global tax rate is 20%. Critics have accused large U.S. tech companies like Google of paying too little tax outside the U.S., despite deriving a large portion of their revenue from these other countries. And Bill Gates, co-founder of Microsoft and co-chairman of the Bill and Melinda Gates Foundation, says that President Trump's America First agenda could damage the U.S.'s long-term influence in Africa. Gates spoke with our Bloomberg editor-in-chief, John Micklethwait, in Davos. They talked about his foundation's efforts in Africa and their fight against malaria.
There's a tendency for several things to happen unless you stay committed to these things. One is that you get drug resistance, either the insecticide on the bed nets, and we have drug resistance to that now, so we are working with the private sector to get innovation there. The drugs themselves, we use these artemisinin combinations. In Southeast Asia, we have resistance there. And then just the energy people put into these programs. One of the great ironies is that as you get malaria cases down, then a government will tend to move on and focus on something else, and so you'll see a rebound. So the last 3 years, because a lot of the bed nets have been wearing out, we haven't refreshed them as quick as we should. The last 3 years, we actually have had the number of cases stay flat. And in a few countries, including Nigeria, the cases have gone up. You always have a little bit of some variation in terms of the weather. The wet season is when the mosquitoes proliferate in an exponential way. But the community needs to get its act together, and having showpiece things where we really learn, like this Central America thing, is a key part of that.
Do you think the Chinese are really this time looking at doing works which are kind of pro bono as opposed to building things where there's a much more straightforward commercial advantage to them?
I think as they're becoming richer, as they're seeing a strong role in the world, China has a conference with the African leaders on a regular basis called FOCAC that I'll attend later this year. Compared to the U.S. in history and today, Chinese aid is very, very small, and the African countries appreciate, particularly in HIV and malaria, where under President Bush, the U.S. made these big increases. They totally appreciate that we've done that, and I think we really can afford to keep doing it. It's a very small part of the budget, and I don't think going to them and saying, hey, we need to increase AIDS or malaria deaths because we're so short of something really is the best idea.
There's obviously a social good there, but there's also this question of soft power, whether America now is prepared to commit itself to those things. Is that something that you worry about, especially with the current administration?
Yeah, the balance of hard power versus soft power, the U.S. uniquely has the ratio emphasizing hard power, and I'd hate to see it shift even further. And as part of these budget discussions, the question of, do you grow the State Department at the same time you're growing the pure defense budget? Even the Secretary of Defense has been eloquent that you don't want to give up your soft power tools, and it's all being debated.
You follow a lot of history. Isn't this arguably the first case of a global hegemon sort of willingly giving away that hegemonic power by not investing in soft power? Normally what happens is the hegemon gets pushed out and all this soft power goes too. In this case, America is actually pulling back from helping the rest of the world, surely.
Well, I wouldn't say it's unique. The U.S. has often had this debate. Our relationship with the United Nations has had its ups and downs under different administrations, and keeping some pressure on the UN to be efficient and reasonable is not a crazy thing. How far do you go? it's all to do with the specifics. In the case of health, the lives are being saved for very small amounts of money, and you can aim to both lift the country up so it's self-sufficient and get rid of the disease. And so it's not a commitment that you're stuck with forever. So I think these ones, even in this atmosphere, make the cut.
Do you think George W. Bush, in a strange way, never got the credit he deserved for trying to save lives in Africa in the way he did?
No, he didn't, because Africa is less visible. Not as many people go there. His PEPFAR initiative, which was HIV focused, and his President Melinda initiative, those were fantastic things. And I do think in some circles he does get credit for those things, but probably not as much as he deserves.
One last thing, President Trump, famously, all these countries, he's described them in a not terribly nice phrase. Do you think he should concentrate more on the poor of the world?
Well, I think he should. That's the area where I've chosen to take the wealth that was created through Microsoft and that Warren Buffett has been so generous in providing. And so, I understand that money can be very, very well spent. And so, I'm in there saying, come on, let's keep up the good work.
Microsoft co-founder Bill Gates there with our Bloomberg editor-in-chief, John Micklethwaite, in Davos. And finally, breaking news out of Washington, President Trump speaking to reporters about Robert Mueller's investigation, saying he would talk to Mueller and say that there was no collusion with Russia. President Trump is leaving tonight for the World Economic Forum in Davos. We're going to have full coverage of that on Bloomberg Television and radio this Thursday. He will be getting on a plane momentarily. This is Bloomberg.